Should we have expected all of this?
Yeah, Caroline, Ed, good to see you. You know, the challenges that the chip industry are facing look like they are coming to an end, which is the good news. The cuts at Samsung for manufacturing capacity is always part of a big bust boom cycle in the memory chip world. We're seeing that play out. But the Apple and TSMC news, has some people wondering just how far down the PC sales are going to go and how long that part of the world is going to take to recover.
And this becomes circular in a way, Ed. We kicked off the conversation of today really discussing some of the Apple issues, the fact that they're seeing a slowdown in PCs that just is highlighting the electronics demand that diminishes and ultimately that hits chips.
I think, Joanne, this is where it's hard to understand what's going on, right? Is this a demand issue for the end market? Memory chips go into PCs, other consumer electronics. Is this chip customers going through inventory and that there is a supply gap? What for you is the single biggest factor right now that's hurting the chip makers?
For those exposed to the consumer, PCs and smartphones, it's certainly a demand decline, right? After the surge in purchases during the worst of the pandemic, right, we're seeing them digest that and wait till they need to upgrade their PCs or their smartphones. So I think demand is largely driving what's going on both at Apple and TSMC and had already gone on at the other PC manufacturers. The latest data from IDC just confirms that, Apple's higher priced PCs are now seeing that same kind of drop off. And don't forget, we also saw news recently that Apple was cutting its demand for chips out of TSMC, particularly the newest chip, the M2. And that, was also a signal of what this was likely to be for them for the first quarter.
You've taken us there to next generation technology. The first thing that Caroline thinks of, Joanne, when she wakes up is artificial intelligence. And when she goes to sleep, artificial intelligence is all any of us think about at the moment. But in the chip sector, that's what's driving sales right now. You look at NVIDIA as the kind of prime beneficiary of that. Is that an area that excites you as an investor?
Yeah, Ed, you've just bridged to the exciting area of the chip world, which is high-performance computing, the generative AI. And don't forget, there's also a broader demand for chips out there in industrial applications and medical care applications. So while we do see, right, the PC and smartphone space in a demand-driven decline, and all the inventory problems that came along with that, we continue to see secular, that is multi-year growth in the other areas of more advanced chip demand, like for NVIDIA chips, like for servers. We know data centers are continuing to expand. We have all this traffic running across the internet, and now all of this demand for really high intensity computation driving the demand, for example, for NVIDIA chips. So one has to look more broadly at the chip space and not just focus in on the PCs, which we know they're in cyclical decline. But there are plenty of opportunities for companies to continue to grow through those other areas.
I have to say, Ed, it's a family affair, and my husband did all of the Easter egg hunt clues this weekend via ChatGPT. It nearly blew my mind. But talk to us, Joanne, aside from the excitement of artificial intelligence, there was some hope, some silver linings coming from, for example, IDC saying some of this pullback means maybe TSMC and the like start to get where they manufacture in order as we start to see a bifurcated world of China versus the US, but also that things are going to pick back up in 2024.
Yeah, I think that's fair. And one of the things we've been looking at as a potential positive driver for these markets, in addition to, eventual stabilization and ultimately cuts in interest rates, which will help these higher growth stocks to recover as they have been right since late last year. The next thing to come, we do believe, is going to be a recovery in earnings outlooks for the second half of this year and in 2024. And, you saw that Micron report, and it was terrible. But yet they said, hey, we're looking at the end of this inventory clearing cycle. Things are going to get better. And so I think that ultimately the tech investor is recognizing that cyclical declines are temporary. We're probably at the worst it's going to get. Probably see companies come out with almost terrible earnings here for the first quarter and cautious guidance. But they're probably going to point beyond that and say, yeah, this is a cyclical decline. We still have these structural drivers. Let's everybody look forward to that, because these companies still have a lot of earnings power and earnings growth ahead of them once we get through the cyclical decline.
And Ed, these are companies that have to think for the very long term, particularly when they're thinking about R&D.
Well, I like the point that you made about where they manufacture. Sorry, Joanne, because I was just, one thing we haven't talked about recently is the CHIPS Act. You have Intel trying to, reinvent itself on the foundry side, but also TSMC looking at Arizona. As an investor, is there an opportunity to put your money among those names that are due to get public money support, right, as what's happening in the CHIPS Act, the rethink on production and supply chain?
I think that's going to be a relatively minor driver of the stocks. It certainly gives Intel a lifeline to get it past this technology, stumbling block they've gone over, gives them time potentially to get into the foundry business. We're not so excited about that name in particular. For the other ones, though, what you can expect from these subsidies is ultimately a decline in the depreciation that they'll have to take against these new factories, and that should help sustain their margins. That's a good thing, but it wouldn't drive our investment thesis overall. We'd still want to look to see whether they have a leading edge in the chips they're producing or designing, and whether they're serving the right markets, the ones that are really growing. So I wouldn't use that as a real driver of an investment thesis at this point, but it should help sustain some margins.
And one company, of course, we were shining light on the companies that do well on the day, the Microns, because Samsung's going to pull back in terms of its supply, Joanne. But I remember speaking to the CEO of Micron, who a year or so ago was saying, boom bust cycles, they're over. We're in it for the long term. We're going to see IoT, we're going to see autos, and we're going to have this perpetual need for chips. That doesn't seem to ever work out.
That was the great hope. And we heard it from many companies, from Texas Instruments to Micron to others. I think, though, we have to take a little bit of a step back, recognize two things. One, it is the case that the demand and the use of chips is far more diverse now than it was the case in, the 1990s and the first decade of the 2000s. What happened to disrupt that whole thesis that chip demand was more diversified and therefore there'd be less of these cycles, which in the past had really been driven by the PC and when the new chip came out? What happened was we hit a pandemic, and the pandemic coordinated the purchases by lots of companies and lots of people of new PCs and new smartphones. And now we're seeing the backside of that, where they're now pausing since they just bought a bunch of new stuff and they're waiting. We didn't expect to see that kind of a shock to the PC and smartphone cycle. That really probably only came about because of the pandemic. I think once we get beyond this, I think that more diversified end market dynamic will come back into place, and we'll see much smoother cycles going forward for the chip industry as a whole.